Eva, nice to be with you. Thank you so much for being here. Let's get your thoughts on the recent moves we've seen in technology. It's interesting. We had a real correction after 3 days of selling. Got some of that back yesterday, about 25% of it, but lost some momentum today. So what do you think is happening? Are you spooked, or is it just some normal market action to you? How does that determine what you're thinking going forward?
So we think there is uncertainty in the U.S. markets, and as your listeners know, the VIX has already priced in the U.S. presidential election as the single most riskiest event in the history of the VIX index. So we think there's a lot of uncertainty. We have daily news coming up, and we believe the best opportunities right now are in non-U.S. equities. And the reason for that is not only the political risk, but also, as your previous guest mentioned, we have the sliding dollar that bodes well for international investments right now, because of course, if you invest internationally, not only do you get the exposure to equities that can grow a lot, but also you have the benefit of the U.S. currency sliding. So what we are seeing now is flows going overseas. Past week, we saw $2 billion flowing into non-U.S. equity ETFs, whereas here we had almost zero, it was flat. And over the past month, the month of August, we saw $8 billion flowing into non-U.S. equity ETFs. So we think that investors right now, as we saw the correction with tech dropping 10% the past few days, and then, of course, they went up a little bit, but we think that might happen again. Investors can do much better overseas.
Right. That's a great summation to tell me that $2 billion over the last week or two, and then $8 billion over the entire month of August. There's a clear trend. And the trend are the inflows into investing abroad because of what you're saying, the concerns that the people have maybe about the U.S. election and who knows what else. So what are you recommending at this time? I know you have an ETF, a small cap ETF, ERSX, which is non-U.S., I believe, and some non-U.S. names for us. Tell us a little bit about some ideas where people can have some actionable advice.
That's right. So you're right. That's a non-U.S. small cap ETF. It's called ERSX, and it's a very good ETF in its category. It's one of the top. So 5 of the holdings that I want to speak about today are one of our favorites. Some of our favorites are, first of all, Tianeng Power, because we are bullish about China. That's a Chinese holding. And it's a battery manufacturer in China. They supply electric vehicles, mostly tri-wheeled and bi-wheeled vehicles that are very light, like, for example, electric bicycles. And because of COVID, that stock did very well. It was up 150% year to date because, first of all, of course, people would order food and the food would arrive with bicycles, but also they would avoid public transportation and instead use their bicycles. But we're bullish about this stock because China is engaging a lot of environmentally friendly ways of transportation and other environmentally friendly solutions in the long term. So we think that stock is going to do very good. Now, if we go to Europe, a stock that we really like is CRISPR Therapeutics, and that's a gene editing company. So they alter the genes, the DNA, with the technology called CRISPR, and their revenue increased 12 times over the past 3 years, and their R&D, they invest a lot in R&D. Their R&D increased 3 times over the past 3 years. So they have no direct competitors at this point, and we believe that this is a great growth opportunity in the long term for investors.
That may be the coolest video I've ever seen there for CRISPR Therapeutics. To your point, I mean, when we look at that as all about gene editing, and that's a big deal. I know you had a few others, including Afterpay, another one that was on your list. Tell me a little bit about that one, which would almost be like an Australian Square or PayPal, right?
Exactly. So that's a competitor of Square or PayPal or even Klarna, the well-known U.S. Fintech companies. It's a financial technology company based in Australia, as you said, they're up 150% year to date, and they are very popular with millennials because millennials do not like credit cards. So that's an interest-free installment payment company, and they did very well during COVID because people would shop online. They also have an app where people would browse and shop their favorite items. And another holding that I mentioned, maybe it's Fiverr. That's an Israeli that many people might know because many of us use it, right, to outsource work overseas. That is also 150%. No, sorry, that's 400% up year to date. They did great, and their revenues also have skyrocketed, and they saw in Q2 an increase in their customer base of 28%. So right now, because of COVID and all the companies, right, working from home, they have figured out what kind of tasks to outsource overseas rather than having in-house people working on those tasks. So we think with the work from home movement and in general companies kind of figuring out their processes and what tasks they can outsource, that stock is going to do great.